Alrighty, folks. If you don't know, Brian and I usually respond to questions from the audience, and this one came from one of his coaching students, basically asking, "Hey, Brian, should I change my investment strategy based on higher rates?" So, Brian, I know I have my thoughts, but as the guest, I will let you go first.
Yes, sir. So, yes, I think you absolutely should change your investment strategy based on rates. Um, I guess we could bounce around a little bit, Mike. So, talking about fix and flip first and foremost, if you're out there doing deals and you're using comps, right? You're using comparable sales from 6 months ago, 3 months ago, even. Thinking that, you can achieve those things, and even more so, trying to even time the market to some degree, like those days are over. I just want to like put up the red flag, like those days are over.
Gone.
You need to be ultra conservative as you're underwriting these deals and looking at the days on market, making sure that you're buying below median, or selling below median, I should say, in most markets. And then not trying to, this is a big mistake a lot of investors make, where they look at what's active on the market and what's pending, and they start thinking that they can achieve whatever said sales price because they saw something go pending at 380,000, for instance, right? But just because it went pending at 380 don't mean that it's selling for 380, and you're making a poor assumption by assuming because something went pending that means that you're at the right sales price. And so, I want everybody to be consciously aware that you need fresh data. You cannot use the same historical data that you would typically do as interest rates continue to tick upward and the consumer affordability continues to change.
Yeah, it's funny. I would give if somebody asked me that question, I would say absolutely not. You don't change at all. Everything you've just said is very true, but I actually think higher rates are a good thing for people who are not scared of doing the work. Right? When the beauty about interest rates is it impacts everyone.
Mm-hmm.
And they impact buyers and sellers. So what I told everybody to do on the daily financial news today, as an example, as a kick in the ass to stop bitching, is take a listing that you like. Assume it's a 6% interest rate. Calculate your payment. Let's say it's $2,000 and it's 400 grand. I'm just, whatever it is. Okay, today you can't get 6%. You get 8%. Well, guess what? Do the calculation at 8%. Figure out what you could pay and get a $2,000 payment. Here's the good news. You're not going to pay 400 grand. You're going to pay 372 or 363 or whatever the heck the math says. You all got to buy better. Higher rates are a great thing for two reasons. One, they impact everyone. And number two, and I only can say this because I've been doing this for 20 years, higher rates mean motivated sellers can't hide. They can't hide. The only people listing properties in a market at 10% or 8% or 12% interest rates are people that have to sell. And guess what that means? Eventually, they may have to accept my disrespectful offer.
For sure.
I love higher rates.
For sure. And so just to be clear, right? I'm having a flipping conversation. You having a cash flow acquisition conversation,
very true.
Right? So let's just clear that up for the audience so they don't think that we're on opposite sides on the same point. You know what I mean?
No.
Because flipping is a totally different animal in respects to the interest rates and trying to time the market and all the rest of it, right? Doesn't mean don't go flip. It means flip and proceed with caution, that you got to get really diligent on the acquisition side to make sure you give yourself enough cushion and margin to not anticipate that whatever things sell for in 4 months from now would be selling for what they were 4 months ago, right? Then that's the part I was trying to make clear.
No, you're absolutely right. Let me throw a couple of my thoughts on flipping. I've done almost 60 flips in my day. I did 2 last year that sold in January and February of this year, but have not done any. That's not my core story, right? I'm a buy and hold, boring landlord guy. But if I was going to do a flip today, my exit, to your point, would have the exit or the end product would be below the median, right? The after repair value below the median. I would calculate at least 3 months of extra holding time, which means I got to pay less. I would calculate a selling price 5% below today's comps. Again, being conservative. I would count repairs being up five. I mean, I would take everything and be more conservative, which again goes back to buy it cheaper. I want people to realize we are heading into the slow time at crazy high rates. It is a horrible time to be a seller. It is a horrible, horrible, horrible time to be a seller of a ugly property. I'm team buyer. I'm team investor.
For sure.
I am like, let's go do the work and get excited. It's going to be hard. It's never easy. But the best deals I've ever done are from motivated sellers. And in the environment we are in, and it is going to get better, they can't hide.
100%. One of our students, she just bought last week. Actually, she closed on Friday, a duplex in Detroit. The seller wanted 160 for this thing, right? She got him down to 100,000, a little over 100. I think 105, right?
Wow.
And then it needs about $60,000 worth of work, so about 30,000 a door. So she'll be all in at, call it 170, right? Okay. And the current ARV is around 225, 230. And so, you know, her kind of thought process was she'll get this thing renovated, do the BRRRR. And I told her whether she can pull equity out or not is irrelevant. The key to this purchase is at 20% into the deal, right? So let's say she got 25, 30 grand into it on the down, the lender's gonna cover 100% on the rehab. Now all of a sudden you got 1,300 bucks coming in up and down. So you make it 2,600 gross. At the debt service, you're doing 1,000 bucks net per month. Like in 12 months, that's 12 grand. That's almost a 50% return on the cash you got committed into the deal. Like you cannot lose doing those type of deals in any market with any interest rates.
Yeah, exactly. For me, all of my buy and hold decisions come down to yield. How hard is my cash working? If you can work out a deal, even if it's a DSCR loan at 12%, but your yield is 50%, and it's a real yield, not some made up Excel spreadsheet math.
For sure.
I do that deal all the time.
For sure. For sure. For sure.
Yeah. So one of the things that I want to lead with, and we're actually going to do a second video on this because I think it's really important, is folks, you are too focused on interest rates. Yes, I know they're at a 20-year high. Yes, I know they're going higher. Yes, I know lending's getting harder, but it's harder for everyone. If you realize it's harder for everyone, you can either do the work or sit on the couch like a little bitch. It is totally your call. And I'm okay either way.
Oh man, I didn't see that one coming, Mike. But I think that was as well articulated as one could be. So yeah, we could end on that thought. You know?
There you go. Well, Brian, where can people find you?
They can find me at Brian Adamson Official, at YouTube, Instagram. Get off the couch and do the work. I'll just give my last bit of advice.
Thank you.